Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So currently we're living in very interesting times when you can see that the recent events that is going right now in the world and actually is becoming big political news hardly could be separated from the economy. So currently you can't say definitely whether this particular news is economic news or this is political news, because all the political events that we've got in recent weekends, there were a lot of it, all of them actually make direct impact on the economy as well. And that probably specific on the current times when the market and in general, in the world in general, stands on the eve of the big changes. So we have tried today in a report to analyze the recent changes in some economical factors, political factors, and trying to estimate how it could make impact on the performance of the dollar in general and euro currency in particular. So we have come to conclusion, so you could read the details as usual in the report, but in general we come to conclusion that at the crossing of the August and the September we could get really big swings on the market. This is mostly stands in relation to the liquidity reserves on the United States economy. From the one point of view, second, culmination of the rate decision, as from the Fed, as from the European Central Bank. Both of them should do something in September, at least as market expect. And third, there's a really big increase in the supply of the United States debt. All three factors together could lead to the significant swings, maybe even sharp reversals on the markets, especially if reality will not match to the expectations. Which means that on the euro currency, for example, we could get closer to the starting of the autumn sharp reversal to the dollar strength. We do not expect that this will be very long term, but it could be really fast. So the background for this you could read in the report, because it's really too large explanation to just put it in the video. Speaking about the short-term situation, here mostly, at least on the intraday charts and daily chart, everything stands the same. We mostly have explained already our trading plan on Friday. You could see that in the last two sessions we've got some dollar supportive reaction. I suggest that it mostly due to the collapse in Windows operation system across the globe, because you could see demand for the safe haven, so as demand for the dollar, and you can see rising yields on 10-year bonds. Here some reversal has happened. So at the same time, it means that it should not be too long term. So if this tendency is still valid, and we suggest that the tendency still exists, I mean to the upside for the euro currency, we should get moderate technical pullback at some levels, and then our prediction should continue again. It means that if you trade on a daily and weekly basis, so you use weekly chart as a trend direction, where it also stands bullish, while you use daily chart to estimate the support levels where theoretically you could take the position, it means that you have the bullish context and you should not take any short positions. So you just need to wait when the market will reach predefined strong support areas where you could assess the chances for possible taking the long position. Some reasons for that. While the scalp traders who trade on the intraday charts have more options to choose from for possible trading. So for instance, on the 4th time frame chart, what we have here's market stands very close to lower bound of this consolidation, and the first level that I would consider stands around this area. It's 108.16, 108.40. It's conference support by the few reasons. First reason you can find on the daily chart. Additionally to this engulfing pattern that actually stands at the starting point of this retracement, we have not bad thrusting action. So I already talked about this last week. And potentially this thrusting action is suitable for a Jordan Napoli Brent body trade. Correspondingly, if market will reach this area around 108.40, this will be first major support area, 30% support, where potentially Brent body could start to work. It means that here, up from this level, market could start either upward continuation or at least significant upside bounce. So it's definitely first level to watch for if you trade on a daily chart, and particularly watch for possible Brent body trade. Now, if we speak about this engulfing, you know that usually engulfing pattern takes the shape of some ABCD on intraday charts. And we already mentioned head and shoulders pattern right here. So on our chart, this shoulder head, if it will work properly, it should give us some kind of the ABCD, which will be target of the engulfing right on the daily. And approximately it should be around the same 108.40 area. Other words speaking, so when these hand shoulders will reach the target, the Brent body trade on the daily chart might start working and market could start showing the upward action. Correspondingly, if you trade on intraday charts, you could consider both trades. So you could first try to take long position in upward action to the top of the shoulder. Then you could reverse your position, trying to take the short position with this ABCD pattern to the downside and trying to ride either on the hand and shoulders if you like it better, or on the engulfing pattern on the daily chart, which will be actually the same. Speaking about taking a long position, you could see what we have on the bottom. First of all, this is a kind of the triple to buy right now, or let's say it might be some butterfly, whatever. This is some kind of the bullish pattern that is forming, and you can try to use it for possible taking a long position. Second pattern that you could keep an eye on is a double repo buy. So we have thrust down, really good thrust, close above the 3x3, close below. Here at this point we do not have the close below the 3x3, so that's why the second close below we've got right here, which is good for double repo. Now when we will get second close above the 3x3, potentially double repo buy will be confirmed, and you could also try to use it if you'd like to take the long position upside bounce. The target of the double repo, as you know, is usually the 50% of the thrusting action, so it will be somewhere around 109 area. So very close to the point where the top of the right arm should be. So 109 will be minimum target. So theoretical market, of course, could move slightly higher or whatever. One of the scenarios also exists that maybe hand shoulders will start failing and market could keep going high immediately. These chances also exist, but I don't know, maybe in the current circumstances they have a bit smaller chances to happen, because we still have the gravestone doji on the weekly chart, so also suggest a bit deeper retracement. And in general, 109.50 area when the market stands, it's more or less a solid resistance on the weekly chart as well. So from that standpoint, deeper retracement seems more probable. So that's actually a few trade stops that we have, which is actually great, and that means that next week hardly will be boring on the euro currency. So let's keep watching and see how the situation will develop.